Homeowners, meanwhile, or those trying to get into the housing market, will likely be paying close attention to what happens this week with that decision on interest rates, wondering how another rate hike will factor into mortgage rates and borrowing costs. Joining us to talk about that is Peter Norman. He's chief economist at Altus Group. Peter, it's always nice to have you with us. Theo was talking about how quickly Canadians have had to adjust to this changing rate environment. Let's just start with mortgage rates and how quickly things have been changing in that market. What can you tell us?
Yeah, John, it's great to be back. I wish it was under better circumstances, I suppose. But perhaps the good news, and I guess I use good in quotation marks here, but is that the mortgage market seems to have really kind of priced in these increases already. So, it may be that we're not in for a tremendous amount of additional movement on the mortgage side. So we've seen mortgage rates being offered by the banks, kind of like the market rate, the rate that good customers are getting, already move up by about 2.5 percentage points over the course of the last year. So obviously that's in excess of where we've seen short-term rates and policy rates move. And I think, and there's obviously an inflation piece going into there as well, a real rates story to some extent. But I think a lot of it is that it's pricing in these future rate increases as well.
We've talked a little bit about some of the changing dynamics in the market that one could argue are directly tied to higher interest rates, whether that's the actual amount of sales activity or even a cooling off in prices. What can you tell us of what you're seeing on that front right now?
Yeah, John, that's happening without a doubt, but it's not universal. I mean, that's one of the issues. I mean, when we look at markets across the country, I mean, most markets have seen some cooling off in the number of transactions. The number of sales have started to fall, have started to come off of their highs, certainly that we saw last year. Exceptions to that, of course, would be Calgary and Edmonton. Both of those boards are, still showing month-over-month gains and year-over-year gains in terms of transactions. But on the price front, it's a real kind of mixed bag. I mean, I look at, 33 key markets across the country as an example, and only about a third of those so far are seeing those month-over-month declines in even in a small way in the most recent data. So we're still seeing some that are still climbing, but perhaps at a slower pace. And I will say that of those that are showing a little bit of decline in the most recent data, just about all of them are found in Southern Ontario.
Well, I'm glad you brought up Ontario as well. And certainly we talk about the housing affordability. That has been something endlessly politicians have addressed. And while we typically have talked about finding ways to create new supply, it does seem like this higher interest rate environment takes some of that affordability off the table short term. Maybe there's more properties on the market, but if you have to figure out the mortgage math, maybe you're back at square one. And so the movement of people, there have been some stories recently about people in Ontario perhaps looking to Quebec, looking to the Montreal market. Can you elaborate on just sort of the movement of people that we're seeing as a result of what's happening in the housing market?
Yeah, I mean, that's happening, John, but it's not as major a story as perhaps is being made out. I mean, we still have a predominant amount of the migration driving the GTA market in particular, but really Southern Ontario overall. The dominant form of migration is in-migration internationally, both in terms of kind of new immigrants coming in, but also the net temporary residents and so on and so forth. And so those numbers still are really dominating. On the interprovincial side, these are people that are moving, from one province to another. Sure, we saw that number kind of switch, kind of the coins flip over in 2021 versus 2020. For quite a number of years now, more people wanted to move into Ontario from other provinces than out. And in 2021, that flipped around, more people moved out. But nonetheless, those numbers are small in comparison to the international ones. And that's an important context to keep in mind.
Okay, so given how important housing has become to Canada's economy at this time when we're seeing rates go up, what are you going to be watching very closely to determine how far rate hikes go? Because obviously it's a delicate balance for the U.S. Fed and the Bank of Canada and any central bank, as they're raising interest rates to try to avoid cooling things down so dramatically that all of a sudden we're talking about whatever you want to say, hard landings, recessions, all that kind of stuff. And it's just hard to ignore that outsized influence housing now has in Canada's economy.
Yeah, I mean, I guess the perfect world would see a kind of a period with perhaps transactions falling off a little bit, but mostly prices kind of leveling off and perhaps even retracing. Even if they retraced about a year's worth of their gains, I think that would probably, in the end, be pretty positive for a lot of markets, particularly in Southern Ontario, where you have seen seen those numbers push up quite a lot. I think that would bring some more. It would be unfortunate for people who have purchased houses recently, but it would bring a lot more stability to those markets going forward. But that's a narrow knife edge of an outcome, right? Because one possibility could certainly be that that we have a little bit of a pause, and then other financial conditions buoy demand again, and we start to see heat coming back into the market. And of course, the flip side is, particularly if we start seeing increased negative economic news, like there's risk of a recession south of the border, potentially here, et cetera, that you could, combined with these higher interest rates, could really just see the housing market take a pretty substantial step back. So there's a lot of outcomes that come from here, but certainly the best of those outcomes would be a pause in pricing and then start to get these markets back online. You said something, John, I'll just add to this. I know we're going to do the end of our time, but you said something earlier about the supply shortage, et cetera, and that maybe this is going to be but that ends up being still one of our big medium-term risks, right? So if we have a bit of an adjustment in the housing sector that kind of takes a bunch of new production off stream, that's going to be bad 2023, 2024, 2025 news, because we're still sitting at fundamentally a kind of a housing supply shortage. A short-term change in the financing for owner-occupied housing will certainly take the steam out of the market, but it doesn't reverse that underlying pressure that we have, that we don't have enough bedrooms for the number of people we have in this province, which is the fundamental problem.
Yeah, no, that's